There we go, guys. Finally, the bounce that I was talking about. I was saying at all costs for the monthly close, Hbar cannot lose 18 to 19 cents. The 200 EMA at 19 cent had to hold. This wick here, the previous low, had to hold. So everything I was saying back at 27 cent actually came true. What I was suggesting on this extremely massive bounce was that it was eventually going to fill in the wick. But while hovering above the 100 EMA, we had this falling wedge pattern. And the target itself is this red box area all the way up at 33 to 36 cent. But I'm actually going to get rid of this. You can see that we've broken out over the past few weeks and just kept on going lower and lower and lower. But my last Hbar video, I said this has to be the bottom. This has to be where it gets the market wide bounce. But there is always a but. Even though the trend technically has been reset as the 200 EMA maintained, remember that this is an average of the last 200 days. So this is telling us what to expect over the coming months. So this is essentially resetting that uptrend, and we're looking for uptrend continuation over the coming months, as long as we can see consistent reclaims of these previous lower highs. So we can see that there are many resistances up ahead, and they can fail at each and every single one of them. We can see that when Hbar recovered the 200, the 100, and 25 and 27 cent, the moving averages up ahead made it fail and roll over to fill the wick in, simply because we're not seeing characteristic changes. Yes, certain supports were reclaimed, but you're not breaking all resistances, and it's the same situation that we find ourselves in actually right now. Although we saw a 7% move up yesterday and a 9% move up today, this is just moving back up into resistance. And even though I called for a bounce from this location in my last video update, the risk is that we're just moving into previous support now as resistance. You can see that the red box is actually not even in line with this moving average. We might not even get into the red box. Hbar might not even travel up there. It could reject this area exactly and only go lower from here. Look in the past how this moving average was maintained and we went to new higher highs, and the moment we lost it, look at this capitulation event. So it's very important to recover this level. Otherwise, it's just running back into it and attempting to lose this once again by rolling over. It could double bottom and try one more time, but the risk is it could eventually lose, and then we start this new macro downtrend, because at the moment this is meant to be a bullish correction. It will only be a bullish correction long term if this is respected and maintained, never losing 18 or 19 cents ever again, breaking all the resistance points and hurdles that it will face. This will be the very first. But ultimately, if you've been following my updates all throughout this key area, you'd know my two most important zones: 25 to 27 and 33 to 36. So breaking past the first area will send us into the upper band, but understanding that this upper band of resistance is the ultimate killer of the trend, of this potential uptrend. This is where price will be attempted to get sent much, much, much lower. The reason being, if I place a new set of fibs going off of this confirmed new lower low, we can see that the 786 and 886 holds within this location. And you're not going to like what I'm about to share, but this is just the truth. If you don't want the truth, if you want me to be blindly bullish, fair enough. But I've been here for 5 years to not want to be lied to, okay? So I'm pretty sure you would not like to be lied to on a daily basis. So over here, you can see such an aggressive move back up, building up over days and weeks. Let's just check how long time passed. 20th of March to the 10th of April. So pretty much a month, guys, of going up day after day, day after day. You have to think what your emotions would be day after day, climbing back up. We didn't know this was going to develop into 8 months of sideways. You've gone down for about 2 weeks, and it's taken about almost a month to climb back to where you were, and then for it to go to new lower lows. So ultimately, the 786 and 886 did not break. That's how key that level is. And then we can do it once again, measuring this new completed dip. Look where it pumped to, an aggressive move up that went through the month of May the 1st to the 7th of June. Guys, that's well over 4 weeks. 4 weeks of every single day going up. If you get a pullback, maybe feel negative for a week or so, and then the next week or two, pumping aggressively once again, all to just get up into the 786 and 886. And what happened once again? A new lower low. Let's just try this out one last time, so we can see that it had an aggressive move up between 5th of July and 29th of July. Another month passed, and what happened? Pumped into the 786 and 886. I'll let you decide what happened next. What happened? We can see. So that is the unfortunate thing. Let me get over back to Hbar. So we could see this aggressive move up in price all the way to 33 to 36. But as it's the 786, as it's the 886, this actually suggests price can head to a new lower low after move up into there. That is absolutely insane, but it is what it is. That's how TA works. If you didn't know that, then what have you been learning? You know, the issue is everyone lies out here. We only speak, but they only speak about the bullish scenarios, never the bearish, or never take it serious. But look how it's developed. I was right all the last month being negative and bearish, warning everyone. I was bearish all the way up here at 106k in my Discord community. I called very, very early on that this was going to sweep these lows. I didn't think it was going to go down as deep as 78k, with the risk that we could just be pumping up into resistance and continuing even lower. That's the similar scenario that we find Hbar in. It could get up to 33 and 36 and still head to new lows. What I would say though, it's very good taking out the 55 and 25 to 27. We can trade this. We can trade this. You can make money on this. But I'm just, even though we have to be cautious and we could see a move up that ends up in new lows, this is all tradable. You can make money on this regardless. But for holders, you need to understand the risk is, of course, that eventually. Now, in the bullish case, in the most bullish case, we just need to see 25 and 27 cent recovered, a move up into 33, 36 that does not lose 25, 27. So once we get up there, it cannot lose this. If it does, then of course 100% guarantee that's happening. So maintain 25 because the moving averages will also be in that area of support. So any move back down should just get bought back up, finally breaking out. And then we can talk about these higher price targets of $1, $1.50. But the risk is, you know, with hindsight, if we're at $1.50 and that is the bottom, you say, oh, that guy just scared me. That, you know, he's an idiot. He scared me when we went high. Yeah, with hindsight, it's very simple, isn't it? But when we're not up there and the path isn't cleared and you have the path to look at as it's developing from the low, we are not in the clear yet. You must understand that there's no structural changes or characteristic changes to say this is bullish just yet. Just the fact that it maintained the level that I said that it would bounce at, and now just moving back into previous support, which should now act as resistance to head lower. The hope is that the 200 EMA continues to hold. You build up once again and start working our way back up. I will update this as it develops every single day, so you're not caught off guard. Last video said needs to bounce from here. It bounced. Now this video is saying it must break this area, but unfortunately it should reject. We're also pumping on the weekend, low volume. So, and it's not like the market wide is bouncing. It's literally like Hbar on a certain handful. Guys, really appreciate you spending your weekend watching my updates. Thank you for spending your week watching my updates. Really appreciate it. Again, I'm not claiming to be some TA wizard or some god or anything like that. I'm just using very basic tools, which is support and resistance, but maybe on a more advanced scale using the moving averages and Fibonacci's, but it literally is just support and resistance and higher lows and just, yeah, identifying the trend. And so right now I'm not seeing any structural changes to that. We're caught in this downtrend, although at macro level support, we need to start seeing these characteristic changes, and that starts by breaking the 55, 25 and 27 cent. Thank you so much for tuning in. I'll catch you in the next one. Please do support the channel. It really goes far. We're trying to hit 10k subs. And if you could even just leave a one-liner, thanks, or an emoji and a like, it really does go far. So I appreciate it. If you want to get educated, use the links in the description of this update. Cheers.